Okay? Yeah, fine. We are talking about the section. This is from where we got it. We got it from which section? Keep it in mind what we are doing. Okay? We are covering from review and reporting. Okay? Review and reporting. In the review and reporting, what we they are having so many all examination questions. Okay? All examination questions. One of the question is, it is on July 1st, 2005. Okay? You are an audit manager and you are currently working on the completion stage of the audit. A listed company specializing in the manufacture of smartphones. Is that now you should understand what know the entity, control environment, okay? You should know the entity. For the year ended 31st March. 31st March is the year ending. And we are, March, April, May, June, 3 months are over. Okay, July 1st. The draft financial statements show revenue for the year. When they will give this. It means there is something related to materiality. Okay, they are given you a revenue of 500 and the total assets of 2 million, 210 million. You are reviewing the outcome of the audit work documented by your team. You have become aware of the following. There are two issues are there. See, when you are talking about section A, there are two questions based on the theory, rules, okay, and three questions. Usually, it will be pattern like this. Okay, it will be similar to this pattern. On first issue first, what is that? Separately, on March 18th means before reporting date. Okay, before reporting date. Before reporting date. Reporting date is how much? 31st March. Okay, before reporting date. The board of directors approved a strategic plan with the help to increase sales of smartphone in the future. The strategic plan is to upgrade strawberry manufacturing facilities. Mean they are talking about the investment. Automatically you have to think where they are focusing, where they want to focus. Okay, which will allow manufacturing of high quality of technology advanced products. To fund the planned upgrade, the company what they have done, they have issued the equity share capital to the general public. When they have issued the share capital, see the dates. They have issued the share capital on 1st May, or in the month of May, sorry. They have not given, which have generated a cash flow of how much? Which they have generated a cash flow of 4 million. Listen carefully. 18th March, before reporting date, they have decided, decision has been taken for the future. But what happened? They are going to issue the share capital on when? May, in the next financial year, which has generated a cash of 4 million. Okay, reporting date and the auditors has been signed. It has been, the next is the financial statements will be issued. And the last one is the AGM has been conducted. Now, in these cases, it will have impact on the financial statements or not. That is more important. Fine, keep that in mind. We will do that in the course of action. Letter 2, issue 2, letter from the government environmental agencies. Is that environmental? Received a letter dated 15th May after reporting date, before the audit report has been signed. Okay, these are very important. From the government environment advising that water samples taken from the lake close to Strawberry have some harmful, means there is a environmental issues which is produced during the manufacturing process. Now definitely you are going against the environment. There will be some penalties will be there, some compliance issues will be there, some issues which are related to the government policies will be there. We have to think on that, which is produced during the manufacture. The agency concluded that because of this company, there was a contamination and they are going to impose fines. The board of directors denied any responsibility. They have said that no, it is not our issue. Now, more or less, nowadays, more or less, most of the companies, when you are talking about these things, it will happen. Environmental issues are the priority, the prime importance is environmental issues for any company, and have forwarded the case to whom? They have forwarded the case to legal advisors. Okay, read slowly and steadily. We see how the things will progress. See, this is the area where we have to score marks. Okay, we have to score marks because when we have the understanding about the subject, this we will not, we'll have a clear issue. And almost when you are doing the Quotient MC section A, elimination is very important. First you should identify which questions are not related to which options are not related. Now, slowly and steadily, I will ask you first, I will give you option. Which of the following statements correctly describes responsibility to subsequent events occurring, see from between the date on which auditor report is signed and the date financial statements are issued? This is a theoretical question, is it? See, I will write down there, write down on the white paper, the reporting date, auditor will sign, second step, auditor will sign, third step, financial statements will be issued, and the fourth step, there is a AGM. Fine. Now, what the auditor has to do? Read the scenario, give me the option. If the option is right, okay. Otherwise, I will explain you. Even it is right, I will explain you.
It is number 3, sir.
Brown and Green has no duty to perform any procedure after the date which the auditor report is signed. No, they have the duty. We cannot say there is no duty to perform. That is it. There is a duty. Fine. You cannot, auditors cannot, even after the sign, we have to see, we have the option to amend. We have the option to amend. We have the option to discuss. So that, see, we cannot never, ever we can say that the auditors have no duty. This is not outrightly no.
So, sir, when even after audit or report is finished and signed and everything, and there's some issue has come, so they must do something, other action?
Yes, because see the thing, the first step is reporting date. The second step is auditor will sign. The third step is financial statements will be issued. Even you have signed, this is what we have discussed in the last class. Even you have, auditor has signed, but the financial statements have not been issued. Then auditor has, if it is a concern, materiality, then we have to make the changes. That is the reason I told you to.
But in the question, sir, it's mean that financial statement has been also done, no?
Where
It say that in financial statement, if they finish the financial statements.
on March, the board of the approved a strategic plan. The strategic upgrading manufacturing. See, so you are reviewing the outcome of the audit work documented by team. You have been the draft financial statement shows. Where is there? Tell me where it has been issued. Which
No, sir,
paragraph?
I'm saying that if suppose there is a question come to us, the same like this one, but the financial statement خلاص it's done يعني.
We will see. We will see. Don't assume all those things. Don't assume that if it will come. What is given, think about that. Don't assume that if we will do another question, we will do another question. If it is like that, then we will see what will happen. Is it? We'll see other question. But now not now. Now we have to focus on what is given the scenario. Based on the scenario, we have to work it out. Even it is based on the scenario, if it is signed, we cannot say that there is no duty to perform. See, you have been appointed as an auditor to do the things. You have the appointed as an auditor to give your opinion. You cannot say that there is no, if you are being removed from the auditor, then only you say it's not your duty. But till it is there, there is a duty. Understand my point?
Yes.
Next. Go for the next best option.
Or maybe, sir.
Huh?
Or
Brown and Green should discuss any subsequent events they became aware of. Yes, it is a subsequent event. Okay, it is a subsequent event. It is happened after the reporting date. They know, and it has been came to their knowledge that aware with the directors of Strawberry to determine that financial statements need amending. Is that need amending? See, they should discuss any subsequent events. What they are saying, okay, I'm just keeping this option open, okay? What is the first option? Green should obtain sufficient and appropriate evidence and design audit procedures. Now you are not doing audit procedures, is it right? You have to do audit procedures at the time of doing audit. This is no way related to audit procedures, 100%. Brown and Green should obtain a list of subsequent events. They are talking about one event, they are not talking about all the events. What they have said, mentioned, we have to focus on that. Why we have to take other list of subsequent events? If something is there related to that, then we'll take list of subsequent events. We are focusing on a specific event. Means of all the options, Brown and Green should discuss any subsequent event any subsequent event. Is it? They became aware with the directors of Straw to determine whether the financial statements need amending. If it is needed to amend, then we have to do. Otherwise, we should not do. Okay? I can go with this one.
yes, sir.
Read the explanation. The correct answer is should discuss. Anything is there, you have to make a discussion with the management. Okay? Anything is there, you have to discuss with the management. Okay? Whether we need financial statements to be amended. This is a straightforward question. Straightforward question. Discussing with the management is prime important. The question tests knowledge of 1560 subsequent events and demonstrate the importance of having a detailed understanding of 560. While the auditor is not required to perform specific procedures after signing the audit report, once you have signed, again you are not going to do any procedures. If information comes to light between signing, see the thing, between the signing of the auditor report and the date of financial statement issued. Financial statements will be issued only after the signing of the audit or by the auditor. The auditor is required to discuss with the management and determine if there is any issue. You have to first discuss with the management, and then you have to, if there is a need, then you have to amend the financial statements. Are you clear about this? Is it okay? Read, take your time, don't rush.
Yes, sir.
Okay? Next. Explain by choosing the relevant boxes in the statement. Okay? I will send the screenshot. Okay? I will send the screenshot to you. What are the options it is there? One minute. Check. What is the first option? Explain by choosing, okay? Explain by choosing the relevant boxes. How the issue of share capital should be treated. See, they are issuing the share capital, is it right? They are issuing the share capital. When they are issuing the share capital, it is fine. Where they are issuing the share capital, how it shall be treated in the financial statements. The share capital, the issue of share capital is adjusting or not adjusting? When they are
I
issuing
think
the
the
share
correct
capital,
option to be disclosure in the current year of financial statement.
Why current year? It has been issued in the month of when? May. The current financial year ends with 31st March. It is next year. It is next year. We are talking about adjusting, non-adjusting to be disclosed in the current year. It is related to the current year.
No adjusting. So it is next
It is
year.
related to current year. It is not related to the current year. If it is related to the current year, then we have to make adjustments. It is related to the next year. Is it? It is related to the next year. If it is related to the next year, it is a non-adjusting event. Why we have to change financial statements? Is it? Is it? It is a non-adjusting event. Fine. Are you clear about this?
Yes.
Okay. It is a, see, if it is related to current year, it is
Adjusted.
adjusting. It is not related to current year, not adjusting. Okay. Next. What is the second one? Because. Why it is because? Why? Gives new information about an event that do not exist at the year end date. Okay. Give new information about an event that did not exist at year end date. 31st March it is not existing. It is existing in 30 on the month of May. Is it? We have to give a very clear point. It is when we are going to issue the shares, we are going to issue the shares in the month of May. Is that we are issuing the shares in the month of May. Was approved prior to year end, and so information. It is approved prior to year end. Check. The board of directors approved a strategic plan which will help increase the sales of smartphones. The strategic plan is it has been approved on 18th March. Is that? It has been approved on 18th March. Which one we have to take? You see the option. Gives new information about the event that did not exist at year end date. Was approved to year end and so give information about events existing at year end date. Which one we have to take?
Second one, sir.
Which one?
Second one, sir.
Was approved prior to year end. So gives information about, see, okay, it has been approved, but it is exist. It is approved, but it has been anything. See, when it is a non-adjusting, is that it gives information. Okay, it gives you information, but it is applicable before 31st March.
No, sir.
It is material amount. It is material amount. It is not related to the current period. It gives information, that's all, but it is related to the next year. They are talking about in the month of May. They are talking about in the month of, okay, you have approved it. Fine. Approved, that is, doesn't mean that you got the money, everything. Approved that we are going to issue it. If they have issued before 31st March, it has to be taken into consideration. If they have not issued the materiality is very important in the audit paper. Very important in the audit paper. When you are talking about the materiality, you have to make sure the materiality amount is after the reporting date but not before the reporting date. Is that it gives, see, was approved prior to year end and so gives information about the events existing at year end date. Is it existing at the, it is not existing at all. It will come into existence in the month of May. Is it? It will come into existence in the month of May. It gives information about the event. Very simple. That did not exist on 31st March. And it is material. It is, amount is material. Amount is not material. Is it right? Amount is material. No doubt on that. If amount is material, what is the options you have to do? Amount is material. We have to disclose or we should not disclose? We have to adjust or we should not? We are not adjusting. We are not adjusting. We are not, it is a non-adjusting event. It is a non-adjusting event and we are not going to make any adjustment. If the amount is material, okay, the amount is material, we have to disclose. We have to see, we have to be, what we are saying, it has to be true and fair. Is it right? It has to be true and fair. Yes, you have to disclose in the financial statement that there is a approval of the new share capital. It will be issued in the month of May. We are only disclosing. We are not making any amendments. Is it right? We are only disclosing. We are not making any amendments. Is it okay? Now read the complete sentence. You will understand. Read the complete sentence. The issue of share capital is a non-adjusting event because it gives new information about an event that not exist at the year end and is material. Therefore, it requires to be disclosed in the current year financial statements. Whenever you will come across this type of question, you have to find the right combination, and once you have done the combination, you have to read the complete sentence. When you are reading the complete sentence, we can understand whether the flow, meaning, understanding is synchronized with each and every option. Can I submit this?
Yes, sir.
See the thing. Read. The question requires an understanding of the accounting treatment of events after the reporting period. What it says, which underpins ability to audit subsequent events. This is happen after reporting date, subsequent event, and highlights the interaction between IAS 10, that is the events after the reporting date. This is very important. If we have done financial reporting, you will have is a piece of cake for us. We should know what are the events after the reporting date. And the ISA 560. What it says, see the thing, the importance, it talks about what? It talks about two things. Talks about the two things. One, we are talking in terms of events after the reporting date and ISC. Importance of looking carefully at any dates given in the question. The importance of looking carefully at any date. Dates are very important, okay? How you have to look the date. In this case, the shares are issued when the shares are issued in the month of May. Okay, the shares are issued in the month of May, which was after the year end, not before the year end. Is that which is after the year end? Fine, after year end. Fine. However, the information does not provide evidence of condition, which it is not at the which has been at the year end. Is it? You will not have. Therefore, the transaction is a non-adjusting event. Is that what is the transaction? The transaction is a non-adjusting event. As the event is a material, it is material, it has to be disclosed in the current financial statement. Is it clear to you?
Yes, sir.
C210. The audit team has performed various substantive procedures in order to obtain sufficient and appropriate evidence relating to the environmental damage. Very interesting question. Very nowadays, this is the topic which you have to be very focused. They have done. They have corrected all the evidence. Which two, okay, which two of the following are the procedures to perform? Is that which are the two following are the audit procedures to perform in respect of environmental agencies? Tell me please. Both of you, tell me one option. Yes.
Three, sir.
What is the review the
Review the concern with the company legal.
company's legal advisors? Is that review the correspondence with the company's legal advisors to assess the probable outcome of the case. Okay, I agree with you. Next one. Gayatri. Yes, Lala, you can also tell, no problem.
Sir, you can say test the efficiency,
That is,
effectively,
test the
test effective.
effectiveness of the control. That is the test of control. Is it? That is the test of control. That is not a substantive procedure.
Ah, yes, 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 sir.
That is the
You're
test
right.
of control. That is not a substantive procedure. This is the way you can have the difference between what is the test of control and what is the substantive procedure. Next. Forget about that. Between 1 and 2.
One, sir, send a letter.
Send a letter addressed to the government. See, the auditor cannot send any letter directly to the external party. The auditor cannot send the letter. Read the thing. These are the rules. This is the best way. This is the one of the best classes we are going to attend. The auditor cannot, because we are covering complete subject as such. The auditor cannot send a letter directly to the external party. He has to take the permission of the client addressed to the external party. That's all.
But here, sir, it's not mean that the auditor by himself he will send. He maybe request the staff to send so he can check.
No, auditor, see, auditor has, when an auditor is send a letter addressed to the governmental agencies to confirm the matter. He cannot send letter to the government agencies. Can I send directly to the, without the knowledge of the client? Anything the auditor is doing, very important point, remember this. Anything auditor is doing, it has to inform. The client, the third party can send directly to the auditor, but the auditor cannot send directly to the other party. It happens when, see the thing, is it? It happens when, see, read the scenario, okay? It happens, received a letter 15th May, when it has happened from the lake manufacturing, in the agency conduct that the contamination is liable for fine. The board of directors denied the case and went to the, given to the, they have received a letter, is it? From the, when they have received letter in the month of May 2005. See the thing, the board of directors has, who have got involved, the board of directors got involved. Is it right? The board of directors got involved. Now you see the thing. This is where it says, in the option, what they have the thing, examine past year end, board meeting minutes to identify. Board of directors have sent a letter to legal advisors, means board of in the minutes it must have mentioned. Is it? In the minutes it must have mentioned any reference to further developments of the case. Whenever the board of directors are involved, it will be mentioned in the minutes, and board of directors has given reference to the legal advisors. Okay, it will be noted down. Is it okay?
Yes, sir.
Check. Is it clear? Take your time. Don't rush. See, reviewing the correspondence, okay, reviewing the correspondence with the company legal advisors will provide third party written evidence probable of the outcome. Reviewing past year board meetings will provide evidence, okay, will provide evidence to discussions regarding any development. Both of these procedures, these are the procedures, okay, these are the procedures what we are going to work it out, should provide the auditor with a substantive evidence, with a substantive evidence, is it, to enable that these events have apparently recognized in the file. What they're saying, the first option would not be appropriate, as auditor do not have the authority. They don't have the authority to contact the directly. Understand point? They don't have the authority to contact that. The fourth option is related to what? It is related to test of control. Is it okay? Is it clear to you? Why first and last option is not right?
Yes, sir.
Fine. Next. Assuming issue 2. What is the issue 2? We are talking in terms of what is the issue 2. Just revise. Regarding the environmental issue. Okay? Regarding the environmental issue. Is it regarding the environmental issue? Is a material subsequent event, okay, and a subsequent event after reporting date match the relevant opinion to two outcomes, okay. We have done very little on this, okay. Drag a relevant opinion from left into position to match the outcomes of this. Now what happens, see the thing, it is probable that government agency will win the case, but as the letter was received after the year end, the directors did not plan to account for or disclose in the financial statements. Now, we have to modify or we have to qualify. Is that? Qualified means we are giving some comments on that. Okay, qualified means the auditor is giving some specific comments on that. Okay, the auditors are unmodified means unmodified with emphasis means we are not changing an audit report. We are giving and mentioning the situation. Qualified means if it is a serious issue, what they say, what is it is probable that the government agency will win the case, means we are losing the case, but as the matter was received after the year end, what the director say did not plan to account for or disclose it. Can we do it? Can the client can do this, that they are not going to disclose anything in the financial statements? Can you disclose? Qualified means you are putting the thing. The directors did not plan. Directors are not agreeing. Is it right? Directors are not agreeing. If directors are not agreeing, what we have to do? We should adverse. We should not say that it is a negative one. Okay? Adverse is we are not agreeing. Disclaimer. We cannot say that we have the knowledge about this. Is that we have the knowledge about this. We have to modify with emphasis on paragraph. Is that we have to modify with emphasis. Means if there is any changes is there, we can do on that. But in this case, they are saying that it is probable that the case will be lost and we have to pay. Is it right? And directors have not planned for the account. Okay, they did not want to have to disclose in the financial statement. When see, auditors will not take any responsibility. They will reflect the things on the audit report very clearly. If the opinion is qualified, it is a matter of concern. Is that it is a matter of concern. Here, because it is a matter of concern, the auditors will give a qualified opinion. Is that the auditors will give a qualified opinion. Are you clear about that?
Could you repeat, sir?
See, if the matter is about concern, is that we are losing the case. The client is losing the case. Is that when client is losing the case, it's an environmental issue with all the related evidences. Okay, it is environmental issue, and it is given by the government more or less. Is it right? We cannot have unless we don't have. We cannot deny it. Okay, we cannot deny it. If it is and directors are not agreeing, see, there is no point of agreeing. Is it right? When they says it has been done, the directors are not. They cannot say that we don't want to do anything. We will not disclose in the. We will not disclose in the finance. They have to disclose in the financial statements. See, whatever happened to the financial reports, materiality, it has to be disclosed. We should not hide anything. If they are not disclosing, the auditors supposed to give a qualified opinion on this matter. Is it okay?
Yes, sir.
What is the outcome to? Outcome to that, it is possible but not probable that the government agency will win the case, and therefore the directors have disclosed in the matter. When they have disclosed the map. It is possible, not probable. Now option is changed. Outcome is changed. Is it right? Outcome is changed. It is possible, not probable. Maybe. But and what happens? The directors have agreed it that they will disclose this information. When they disclose the information, what will do? What will the job of the auditor? They will modify. They will don't modify. This is the matter, is right? This is the serious matter. There is no doubt on that. Is it? This is the serious matter. Emphasis of matter. Is that they will have the emphasis. They will focus on this matter. Now, they will focus on the matter, and directors have agreed to disclose in the financial statements. Now, the auditor will modify or will not modify?
Modify?
Why modify? They are agreeing to change. They are agreeing to change. The auditor will focus, okay, emphasis of matter. They will focus on matter. They will give importance to the matter. If it is agreeing, they are changing. If they are changing, there is no issue. Is that if they are changing, if the directors are willing to change, willing to disclose, it is unmodified. If directors are not willing to change, is that the directors is not willing to disclose, then you have to modify. Listen carefully. If directors are willing to disclose, you will not modify, but you will emphasize on this issue. You will emphasize on this. You will put that yes, it has been happened, it has been disclosed, and it has been, we are not changing anything. See, there is an agreement, okay? There is an agreement that directors are willing to disclose. Fine. Why you will complicate the audit report? You will not complicate the audit report. You will not modify the audit report, but you will emphasize on this matter. You will mention this matter in your audit report that this type of issue has been happened and the directors have agreed to disclose this in the financial statements. If that is the case, we will not modify. It will be unmodified, but emphasis on the matter paragraph. Is it clear?
Yes, sir.
See the things. In outcome 1, the directors failed, okay, failed to comply. They are not agreeing, okay, failed to comply. They say that they are not going to discuss it. If that is the case, it is probable that the strawberry will receive a fine, which is not reflected. If you are getting the fine, you have to disclose in the financial statements on the basis that the financial statements are materially misstated. A modified opinion will be issued. Very clearly. As a statement is material, but not pervasive, okay? A qualified opinion will be appropriate. It happens once, is it right? It is not going to happen repeatedly. But if it is not pervasive, what we are doing? We are going to issue a material, but not pervasive, not repeated once in a while. We have what they are going, they will issue a qualified. Only on that issue they will highlight. Is it? Now, now you are doing the thing. What is the adverse opinion? What does it mean? Is that adverse opinion? It means that will be issued if the material misstatement has been material and pervasive. A disclaimer would be appropriate when the auditor is unable to get. If you are not getting any evidence, is it right? If you are not giving any evidence, adverse opinion, keep it in mind. It is negative report. You are not getting any sufficient and appropriate evidence, and it is affecting what? It will have the effect on the financial statements. Is it? Of any undetected could be materially and pervasive. Now, what is the adverse opinion? Adverse opinion is your disclaimer. You are not part of that activity. You are not getting any evidence, sufficient and appropriate evidence, and it is going to affect financial statements materially. It is affecting financial statements materially, and we are not getting sufficient and appropriate evidence. If that is the case, then we have to give adverse opinion. Is it? Now, what it says, in the outcome 2, is that this is with respect to outcome 1. What in the outcome 2, what they are saying? They are saying that in outcome 2, they are saying that the correct answer is, but as this is a case of unmodified opinion, the emphasis of the matter would draw the issuer attention. Issuer attention means you are giving the attention of the stakeholders, users, that the case has been disclosed in the notes to the accounts. Is it? It is they say that the correct treatment has been adopted by the auditors. The directors have accepted it, and they want to disclose in the financial statement. Is that it is unmodified opinion. Okay, when they have agreed, there is no point of making any changes. The emphasis of matter, we are focusing on the matter so that the users of the financial statements has been correctly informed that this issue has been happened. What they say, care should be taken by the candidate students considering the emphasis of paragraph. Is that in accordance to ISS 170? Is that emphasis on paragraph? Is that emphasis of matter paragraph of independent? Emphasis of paragraph refers to a matter appropriately presented or disclosed. It has been appropriately presented. Directors have agreed. Okay. Therefore, is that that in the auditor's judgment is fundamental to understand. Importantly, therefore, it cannot be used as a substitute of a modified opinion. We cannot change the opinion. Okay, we have to unmodify the report, and we have to focus emphasis. Means you have to highlight that issue in the financial statements. Are you clear about this?
Yes, sir.
Fine. Now, see the things. The two issues will be included in the return representation from management. All audit work will be finished by how much? Very interesting question. By 31st July. The auditor report is due to be signed when 28th September. They are issuing the statement. See the dates. Okay, I will emphasize again on dates. They are going to issue on 21st October, which will be followed by the annual general meeting of 30th October. This is the process of an audit report. This is the process of auditing. First, the process will become finished by 31st July. Reporting date is 31st March. The process will be finished by 31st July. They will sign on 28th September after process completed. After signing, they will issue on 21st October financial statements, and a general meeting will be in the end, 30th October. Focus this process: reporting date, audit procedures, auditor signed, financial statements issued, and the AGM. Which of the following would be most appropriate date of directors to sign return representation? Very interesting. When you will sign the written representation? Before signing the auditors, after signing the auditors? We have done ISA 580 written representations. Before auditors will sign or after auditors will sign? When their written representation should be? You are taking you are taking some written representation from the management. When you will take as an auditor, you will take before you sign or you take after your signature?
After our signatures.
After your signature, after you signing, you will take the auditor signature, client signature, management signature, or you will take before you sign?
Before, sir.
Then which date maximum when they are signing? When they are signing? They are signing on when? They are signing on, auditor is signing on when? 28th September. 28th September. They will take off before 28th September or after 28th September?
After.
After signing the auditor report, you will ask the evidence, written representation.
No, see, I'm in before.
Then which date? 31st July, 28th September, 21st October or 30th October?
31st July.
31st July they will complete the process. They complete the process, they are finished, audit work will be finished by 31st July. They are signing on when? 28th September. There is a gap, there is a time between the auditor has completed the process and after signing the audit report. In this process, what we'll do, if you have any clarifications, any discussions, you will do. Any written representations you will take. In this time you will take. After finishing the audit procedures, getting my point, understand this. After finishing the audit procedures, okay, if you have any queries, you will discuss that with the management. Before signing, 28th of September, before signing or till that date, if any doubts are there, you will get the you will get the evidence from the management. Once you have get the evidence from the management, then the auditor will sign. Once the auditor will sign, there is again there will be some gap to issue the financial statements. Okay, that is the third stage. Is that is the third stage. Means before you sign or till the date you as an auditor you sign, you have to get the return representation. That is the time available to the management to give representations to the auditor. What is the answer for this? Tell me. What is the answer for this? Before you sign, understand my point? Before you are signing on 28th of September, before you sign, you will get all the evidences. Once you have signed, you will get it, but mandatory is you have to get the representations before you sign the audit report. Here when he is signing on 28th of September. Which of the following is the most appropriate date to sign the directors of the strawberry to sign the return representation? It is when it is 28th of September. Can I submit?
Yes.
See the things. Just read it. The students must ensure. See the thing. The must ensure. Is it that they need to carefully. They read it carefully before attempting this question. This question requires candidate to apply the knowledge of ISA 580. The ISA states that the date of return representation must be as near as possible, but not after that. See, but not, is it not? But not after the audit report. The auditor is due to sign on 28th of September. It will be most appropriate date for the directors to sign. Is it okay?
Yes, sir.
Yes, Gayatri, it's fine. Okay, this is section A. Okay, now we will do another section B. Okay, now another almost we are going to revise from the beginning. Okay, we are going to revise from the beginning. Fine. Tomorrow also I will take the class somewhere at 9 o'clock. Okay, I will tell you, I am telling you in advance. Only question papers we will do. Now, Panda manufactures. What are the questions they are asking? They are asking 5 elements of assurance engagement. Is that 5? What are the 5 elements of assurance engagement? Tell me fast.
Three party involved, sir.
Yes.
Suitable criteria.
Yes.
Subject matter.
Yes.
Sufficient evidence.
Yes.
And subject matter.
Assurance report.
Audit assurance.
Okay. CREST, criteria, responsible party, evidence, sufficient suitable subject matter, and
Three party involved.
3-party agreement. Okay. Fine. Now, how many marks? 5 marks. See the thing. 5 marks is a piece of cake. What are the 2 evidence? Is it? Explain whether the financial statements require amendment. If material, if it requires amendment. If before the reporting date, it requires amendment. Okay. After reporting date, it needs disclosure. Okay. After reporting date, it needs disclosure. What is the auditor report should perform with respect to the amendment? Is that 10 marks, 5 marks and 5 marks. Directors do not wish to make any amendments, disclosures, even to discuss the issues and explain the impact on auditor's report. If any, the issue may be, if any, should this issue remains unresolved. 5 marks. 20 marks. 5 marks for the crest, 5 and 5 marks for the amendments, and the last 5 marks is for the, if they don't want to disclose. Read what is given. The Panda Manufacturing Chemicals has a factory and 4 outside storage locations. Panda year end is how much? 30th April. The final audit is almost complete and the financial statements and auditors reports has not signed, due to sign next week. Not signed. Okay. Revenue for the year 55. And the profit is how much? Profit before taxation is how much? 5.6. The following 2 events have occurred. No amendments or disclosures are made. Panda undertakes extensive quality control checks to the dispatch of any chemicals. Testing on 3rd May. When is the reporting date? Keep it in mind. Reporting date is how much? 30th April. It happens in 3rd May. That the batch of chemicals were produced in April were defective. The cost of this how much? I think we have done with this question somewhere. Fine, no problem. Again we are going to do. Okay, we have done this somewhere. Okay, it is the current condition. It can be sold in the scrap of 1. We have done this. Okay, no problem. The cost of correcting the defect is too significant to management for an alternative option. Panda undertakes extensive quality control checks prior to dispatch of any chemicals. They have tested, found that a batch of chemicals produced in the month of April before reporting date was defective. The cost of this batch is how much? 0.85 million. In the current situation, they can sold as a scrap, IS2 inventory. Is that IS2 inventory? Lower of the cost or net realizable value. It has to be mentioned on what basis they have valued this inventory. The cost of correcting the defect are too significant. Means if you want to make correction, it will be very high material. For Panda's company, management to consider this an alternative option. Okay? Now, this is the first case. What is the second case? An explosion occurred at the smallest of the offsite. It happens after reporting date, 20th May. Means you have to disclose it. The result is some damages to inventory and property, plant and equipment. Panda company management investigated the cause of the explosion and believe that they are unlikely to be able to claim on insurance. We have to see what are the insurance policies is there or not. Is that to what extent the amount it has been insured. Management of Panda estimated that the damage of inventory is 0.9 million and it has no scrap value. Again they are making a valuation. Is it right? Again they are making a valuation. Is it right? They have investigated causes of application. They are unlikely to be able to claim insurance. What is the reason? Is that what is the reasons? Fine. Very, very critically. Is that 3 things are there. First, whether explain whether the financial statements require amendments. Before one event is before, one event is after. Is it material? Discuss what is the procedures you have to do. Is it right? To for any conclusions. What are the things? We have to review how they have valued inventory, how it has been insurance. Is it how there is insurance, how they have valued the inventory. We have to report whether it has been disclosed or not. Okay. Next, what is the point number 3? 5 marks. Every option is 5 marks. Total 20 marks. The directors do not wish. Why they don't want to wish? They cannot do that. Is it right? Now we have more clarity on that. To disclose in the financial statements. Discuss the issue and explain the impact on the auditor's report. If directors are not willing to disclose, is it right? Directors are not willing to disclose. Then how the auditor should respond. Is it right? Now I am going for the solutions. What they said. See the thing. The first answer is very straightforward. Subject matter, three-party agreement, suitable criteria. Is there suitable criteria, appropriate evidence, and assurance report? This type of question you can expect very easily. 5 marks. But don't only write headings. You have to explain. Okay? What they say, they made very clearly. Explain. They are asking very clearly. Explain. When they are saying explain, you have to explain it. You should not write only 1, 2, 3, 4 points. Next, they are talking about the defective material. They are talking about the event 1 and event 2. Is it right? Event 1, whether it is adjusting or it is not adjusting. If it happens before the date and it happens after the date. Is it? You have to get the appropriate. What they say, provides evidence of conditions at the year end. Fine. Is that? It has been shown at the year end. Inventory to be adjusted, lower the cost or net realizable value. This is whenever you come across inventory, you have to mention this point. Calculation of materiality, you have to calculate the percentage. Okay. We have to review the board meetings. It's a issue, is it? It's a issue which has to be related to quality controls. Okay, strategic issue. Discuss with the directors. Is it right? Educate in it is what happens. What happens in the event 1? Is it right? They 1 minute. Is it right? Yes. In the event 1, what happened? They have some event which are defective. Is it right? If there are events that are inventory that is defective, we have to discuss with the directors that we have the alternative. Is that we have sufficient inventory to continue the business. Is that you have to get representation regarding what going concern. Inventory, is it right? Inventory is a continuous activity. We cannot stop it. Okay, we cannot. We have enough inventory that the company can continue the sales. Obtain schedule of defective inventory. Get what are the defective inventory.
Could you go up a little bit in the event 1? See, sir, what the keywords if we found it here that we must follow this procedure? Yeah. You mentioned here one keywords.
Pardon?
Sir, I mean that you should tell us one keyword if you found it suppose in this word, that we should follow that procedure which is mentioned in the answer. Yani.
Fine. Okay.
You mentioned word is the default, something like that.
It says that in its current condition, it can be sold at a scrap value. Okay. What happens? They have defective items of a batch. When they have a defective items of batch of chemicals that has been produced in the month of April. Now, when you have defective items in the month of April, is it right? What happens? You should know. Is it right? You should know that whether we can have enough inventory to continue. Is that enough inventory to continue in the next month? Is that in the same month? See, if you have defective items, you cannot sell it. When you cannot sell it, you have taken the orders from the clients. Okay, you have taken the orders from the clients. Now you cannot say that I have defective items. Quality control department has rejected it. What is the alternative source? If you are going to cancel the contracts, cancel the supplies, then what will happen? There is a big question mark of the going concern. There is a big question mark of the going concern. That is one thing we have to understand. Next, what it says that when they are saying that, second point, okay, when they are saying that this has to be, they have valued it. Is it right? They have valued it. How much they have valued it? They have valued it for 0.1 scrap value. Scrap value. When it has been scrap value, there is a rule. There is a rule. Inventory valuation IS2, lower of the cost or net realizable value. Is that there is a rule? When the moment you say, see what is the basis of valuation? Is that there should be some basis of valuation. Is that basis of valuation? Then we have to make sure that yes, we have. That is the reason they are putting one point. Is that what they say? They say that inventory to be adjusted, lower the cost or net realizable value. This is the rule of IS2. Is that this is the rule of IS2. Now, what they are saying? They say that they have there is a defective items. Is it right? Now you should ask as an auditor. You should ask where is the list of defective items? Is that you have the right to ask the client, give me the list of defective items. What we are doing, we are going to say that here it has been obtained schedule of defective inventory, and you have to mention yes, what is the document, what is the supporting documents, on what basis this is defective. Is that on what basis you are saying it is a defective? There should be some quality control reports has to be there. Is that there should be some quality control reports has to be there. Now, when you are doing the things, they say that the cost of the batch is there. The cost is correcting too significant to Panda's management. If there is a when you are talking about the management, see Tati, whenever you talk about the management, discuss with the management. Understand point? Whenever the management is given the reference, it has been given as a reference. What is there? You have to discuss with the directors about the. Always you should make a point. You have to, whenever the management is involved, you have to discuss with the management. Is that you have to discuss with the management. These are the points. Is that they will never tell you that you have to do this. You are making your own understanding of the scenario. When you make the own understanding of scenario, it will be reflected.
Then, but we have to mention this all option, all of them? If we suppose to mention 3 or 4 or 2,
Okay.
is enough?
See, they have mentioned how many things? 5 marks. Okay? They have mentioned 5 marks. If they have mentioned 5 marks, you have see, maximum. See, up to 1 mark for valid point, overall maximum 6 marks per event. Now, you have to also mention minimum 5 events. Is it right? See, if I say that I will mention only 2, they will give only 2 marks. If I mention 5, they may give 5 marks. Understand? Right? If I say that, see how you can expect that you are mentioning 2 points and they will give you 4 marks. When they say, this is what understanding talks about, is that when they say 5 marks for each, I am telling you this from the beginning of the semester, beginning from the first class onwards, that if they say 5, you have to mention 5 points. Here also, point number A, elements, 5 elements are there. Explain. You have to explain. You should not say only we are writing the 5. Understand my point?
Yes, sir.
Fine. Next. What is the second one? See the things. There was a fire. Is it right? What happened? There was an explosion. Is that there was explosion and inventory also lost, and the plant and machinery is also lost. Okay. Now what we have to do? You have to know the evidence of conditions. First, you know whether it happened or not. Is it? It happened after reporting date, 20th of May. Is it right? It happens after the reporting date. Is it? Even it happens after the reporting date, you have to know it is a subsequent event. Is it? It is a subsequent event. It has not been happened before the reporting date. It is a non-adjusting event. It happens after reporting date. It is a non-adjusting event, but it requires disclosure. You see, even it is adjusting or not adjusting, it needs to be disclosed in the financial statements. You have to calculate the materiality. Definitely, you have to obtain the schedule. Is that you have to obtain the schedule and you have to agree with the values. 5 points. You have to take maximum. See, I am telling you this. You should not say 2 points, 3 points. See, you are putting all the efforts and intentionally you are giving less information. They are asking 5 marks means they are asking 5 points. Now, obtain latest inventory records. To obtain how much is the damaged inventory levels. It has been damaged, fine. You get what is the good inventory, what is the bad inventory. Is that? Again, discuss with the director that they will make the disclosure. They are saying that what the director says, here has been management has established that the value of inventory, property and has no scrap value. The management investigated. What they say, the Pandas, is it right? Pandas management investigated the cause of explosion. It is unlikely to be able to claim claims. Okay, it is unlikely to be able to claim the claims. Now you have to discuss with the management whether they are going to disclose it, and discuss the directors why there is no insurance claim. See, it is now insurance is your inventory. It is a inventory. Anything inventory, it has to have a insurance. Insurance is part. Without insurance, we cannot carry forward any business activity. Fine. Now, that is what it says. With respect to the last one. Okay, with respect what the concept there, do not wish to make any amendments. Is it? Do not wish to make any disclosure requires and adjustments to the financial statements. It's a well explained point. Manage material but not pervasive statements. Modified opinion, auditor's report, and qualified opinion. See, management cannot say that we are not going to disclose it. It has to be disclosed. We have to give what is the basis for a qualified opinion. Auditor has to give the reasons, and most importantly, you have an opinion paragraph where you are giving a very qualified opinion that the event has been happened and the directors, because they have not signed, okay, they have not signed. The event has been happened and directors are reluctant to sign, disclose it. Is it?
Sir, could you go and explain the questions again? Okay, sir.
Got it?
Yes.
Now you see the things. Explain, they are talking about explanation, isn't it? There are 5 elements. You have to structure like this, 3-party relationship. Is it? Who are the 3 parties? 2 sentences minimum you have to write. Intended users are persons whom the practitioner prepares the report. The responsible party is responsible for the subject matter. Is a responsible party. He is the intended user is the users of the financial statements. Responsible party is the management. Practitioner is the audit. Who is going to provide professional services. Here, what is the subject matter? Subject matter is only with respect to the financial statements. Is it right? Subject matter is including, is related to what? The only subject matter is we are dealing with the financial statements. Okay. What is the criteria? The criteria is we have to measure against the rules and regulations. Okay. Against the criteria in order to reach the opinion. We are talking in terms of the accounting standards and reporting standards. Is that accounting standards and reporting standards? What is the evidence? We have to get a sufficient and appropriate evidence to give a level of assurance. And the last one is we are talking in terms of the report, how it is going to be worked it. Auditor's opinion. I am telling you again, people will say that students will do this, is there? And that is what, I am not saying this. Examiner's report, when you review the examiner's report, they say that yes, students will write only 1, 2, 3, 4, 5. They will not explain. You have to explain in 1 or 2 sentences. Are you clear about this?
Yes, sir.
Okay, the second one. Isn't it? The second one. What you are doing? A batch of chemicals produced before the end, costing how much? 0.85. We are talking in terms of materiality. What is the scrap value? Scrap value is 0.1. Inventory should be valued. Is that any time inventory question? See, all are more or less on the similar pattern. If the inventory has been reflected, you have to mention it has to be very important. should be valued at lower the cost in accordance with IES 2. It is a scoring sentence. Marks scoring sentence. Understand my point? You can score the marks on this. This is an adjustment event in the event after the reporting period. Scoring sentence or event after the reporting period, before or after. As it stands, inventory is overstated. What is the value of inventory? Inventory value is 0.85. Scrap value is 0.1. Overstated by 0.75. They have mentioned, calculate it, you will get profit before tax. Is it right? Profit before tax and revenue. How much is that? 0.75. Okay? 0.75. Is it right? 0.75 divided by 5.6. How much will get? 0.75 divided by 5.6. It comes to 30.1339. 0.1339 or 13.4%. And 0.75 divided by how much is the revenue? Take the revenue value. Revenue is 55. Is it right? Revenue is 55. It comes to how much? It comes to 0.136. Is that 0.136 or 1.4%? Is that 1.4%? Calculate it, write down on the paper. And this is therefore material to the financial statement. 13.54 is a huge amount. Okay, 13.4% is a huge proportion. What is the procedure? First you have to mention them. It is a simple way. Is that simple way, simple techniques. Audit procedure to be performed. You have to get the schedule of the cost value of the defective items, and you have a documentary proof also. Is there anything is there? You should have a on what basis we have done. Discuss with the management whether this is the only defective batch or there is something more. This is only in the month of April or it happens something more. Review. Is that you should come? What? Review the quality control reports. On what basis they have made that these are defective items? That to assess the likelihood of other batches been affected and discuss results of testing. What we have done. Now, this is a technical issue. Is it right? This is the quality control. This is not a financial accounting issue. Is that this is not a financial accounting. This is a technical issue. When it is a technical issue, you have to discuss with whom? You have to discuss with the technical team. Is that you have to discuss with the technical team. Fine. See, first what we have done, we have calculated the materiality and we said it is a material. It is a material because based on the 5%, 1%. We have done in chapter 6. Is that we have done in chapter 6. It is 5% for the profit before tax and 1%, more than maximum 1% of the sales revenue. Is that? It is as per the rules and regulations. On that basis, first we have to calculate the materiality, then we have to obtain the schedule of the cost and agree that. We have to agree the schedule of the defective items and we have to get the quality control reports. Okay? Are you clear about this? Is it clear?
Yes, sir.
Now, second one, what they are talking about. read this one. Okay, I am sending once class is over, I will send you the updated file. Okay, an explosion shortly after the year end. It had not happened before the year. It happened after. Result in there is a damage. The amount of inventory that is how much? 0.9. Okay, now no scrap value there, and therefore how much is there? It has no scrap value. It is 0.9%, 9 million. Again, you have to calculate. Compare with the 0.9 divided by 5.6. Okay, 0.9 divided by 5.6. It comes to 16.07 of profit, and of profit will require adjustment in the financial, but should be disclosed as it is material. Is right? This explosion is a non-adjusting event. Is it? It is after the reporting date. Very, very important. Therefore, does not require adjustment. Is it? Therefore, does not require adjustment in the financial statement, but it has to be disclosed. See the thing, if you read this one with the dates, it happens after the reporting date. It is material. It is material. It is after the reporting date, non-adjusting event. Is it? It is not adjusting, non-adjusting. And it does not require any adjustments in the financial statement. Next year it will be adjusted, not this year. But it has to be disclosed. It has to be disclosed. This sequence you have to be very, very careful. Sequence is very careful. It happens after the reporting date. It is material. Is it? It is non-adjusting event and does not require any adjustments to financial statements, but it has to be disclosed in the notes in the financial statements. What we have to do as an auditor? Obtain the schedule of the inventory. You see, everywhere you have to obtain the schedule of the inventory and property. And what has been damaged in the explosion. Is it to know whether the things what has been stated is verified. Visit the site where the explosion to assess the damage. It is one of the, is that you can visit the site whether it has explosion. It is not a small thing. And 0.9, the total amount, it's a huge amount. Is it right? Whether people will say that explosion happened, you have to visit it. Is that? Discuss the directors need to make disclosures, the financial statements. Discuss with the directors the need to make the disclosure. And we have to review any disclosures not drafted. If they have drafted, we have to review how we have them. Inspect insurance agreement to assess whether any claims can be made on insurance. They are saying that insurance, is that you have to review the insurance documents. You have to get see, maybe the management has not done that. But you also have to, it's not the management responsibility, it's also your responsibility, the auditor's responsibility to review the insurance agreements, and is there any possibility that we can have any claim on that goods? Is it right? Claim on that inventory. Is it clear to you? Event number 2.
Sir, we have to calculate first, then we give the procedures.
First you have to calculate. Whenever they mention the damaged goods, they will give most probably profit before tax and revenue. Then we have to know profit before tax the threshold maximum is maximum 5%. If you are comparing with the sales, maximum is 1%. Here we have done 0.9, write down 0.9 divided by 5.6, 0.9 divided by 55. Yes, 0.9 divided by 5.6, it comes to 16.1. 0.9 divided by 55, it comes to how much? It comes to 1.6%. And we have to make comment that it is material. Therefore it is material. Is it okay?
Yes.
Can I go to the last one?
Can we keep it, sir, for tomorrow?
Just we'll finish it off now. Only 3 paragraphs are there. Is
Okay,
it?
no problem.
Just only 3. Is it? What they say, what they are saying, what is the question, what is the requirement. Directors do not wish to make any amendments. Is that? They don't want to make any amendment. And what is the response? Simply, directors should make disclosure. They have to make disclosure about the explosion. Is it right? This is because the amount involved is material. Is it? They have to make that disclosure, and it affects what? It affects not only it affects closing inventory. Is it right? It affects closing inventory and closing property, and closing inventory means next year opening inventory. Fine? Means they cannot say that we will not do. We have to mention why they have to disclose. If the directors refuse to make the disclosure, then auditors modify the opinion. Is that? The opinion will be what? The opinion will be qualified. Is that? The opinion will be what? The opinion will be qualified. As the matter is material but not pervasive. That the opinion is qualified. It's not because it's material. Is that? It is material. You cannot say that. We cannot say that it is not a material. You have to write this point. If it is one time pervasive, it is unlikely to be pervasive. It happens once in a while. A basis of qualified opinion paragraph. Is that a basis where you are mentioning? Is that should be included in the auditor reports? You have to give reason. Is that reason for modifying the opinion? Is that? And the effect of explosion on the opening balance of the following financial year. The basis for qualified opinion will be placed immediately after the opinion paragraph. Is that the basis of the rules are very simple. The auditor, they have to make the disclosure. Director should make the disclosure because the amount is material. Yeah, and it will affect closing balance as well as opening balance. If the directors refuse, then the auditors has to modify the opinion. Is it? On the basis of material misstatement. The opinion should be qualified opinion. Is it? Of the matter. Is it? But not unlikely to be pervasive. A qualified opinion paragraph should be included. Is that? And you have to give reasons for modifying the opinion. That the effect of explosion on the opening, you have to give reason. Without reason, you cannot do, auditor cannot do anything. And it should there. Once where you have to mention this modified or qualified opinion after opinion paragraph. Is that subject to after opinion paragraph, you have to mention qualified opinion. Is it okay?